China's extraordinary economic expansion in recent decades has had a profound impact on international markets in addition to changing its own environment. The trajectory of China, the second largest economy in the world, has an impact on global investment trends, commodity prices, and trade dynamics. Comprehending how China's changing economic policies and obstacles will impact international markets in the future is essential for investors, companies, and governments. This overview highlights key aspects of China's economic impact on the global stage. Number 7. Rapid economic expansion. China has seen an unprecedented economic shift in the last 40 years, with the introduction of market-oriented reforms. In 1978, the nation's economy transitioned from a predominantly agrarian one to an industrial powerhouse, with an average annual GDP growth rate of about 8%. Significant foreign direct investment, state-led infrastructure development, and an emphasis on export-led growth have all contributed to this expansion. China has significantly grown its proportion of global exports by becoming a global manufacturing powerhouse, going from less than 1% in the late 1970s to over 13% today. Due to this increase, around 800 million people have been pulled out of poverty, resulting in a growing middle class that now makes up a sizable portion of the consumer market. The effects of this expansion transcend beyond China's boundaries. As Chinese consumers' purchasing power increases, they are affecting the demand for goods and services globally, changing marketplaces in industries like technology and luxury goods. Additionally, China's economic policies have frequently been used as a template for other developing countries looking to industrialize quickly, making its success story a central topic of discussion in international economic circles. Number 6. Shifting growth model. China's economic structure is presently undergoing a significant shift away from an excessive dependence on manufacturing and heavy industries and toward a more balanced strategy that prioritizes innovation, technology, and domestic consumption. Initiatives like Made in China 2025, which focuses on cutting-edge industries like robotics, aerospace, biotechnology, and renewable energy in an effort to make the nation a global leader in high-tech manufacturing, perfectly capture this strategic shift. Over $500 billion is spent on research and development each year by the Chinese government, making it one of the world's biggest R&D investors. In addition to strengthening China's competitive advantage, this change attempts to solve the problems brought on by growing labor costs and environmental issues related to conventional manufacturing methods. China aims to develop a more resilient economic model that can endure external shocks and lessen susceptibility to changes in the world market by promoting innovation and domestic consumption through policies that support higher wages and social safety nets. Number 5. Impact on global trade. International supply chains and pricing systems in a variety of industries have changed dramatically as a result of China's entry into international trade networks. China's economic activities have a considerable impact on the dynamics of global commerce because it is the world's largest exporter and a major buyer of raw materials. Because of economies of scale and effective production methods, the nation produces a wide range of consumer goods, from textiles to electronics, frequently at cheaper prices than rivals. In addition to lowering prices for consumers globally, this competitive edge has sparked worries about job losses in Western economies as manufacturing moves to China. Furthermore, China is the world's biggest importer of commodities like copper, iron ore, and oil. Due to its demand for raw materials, changes in its economic performance can cause major volatility in the world's commodity markets. Commodity prices, for example, can drop precipitously when China's economy slows down, or when policies are changed to limit industrial output, for example, environmental rules. This affects exporting nations that depend on these earnings. Therefore, in order to properly manage any risks, countries that trade with China need to keep a close eye on its economic situation and policy developments. Number 4. Geopolitical tensions. Geopolitical conflicts with other major economies, especially the United States, have increased in tandem with China's economic dominance. These tensions are best shown by the U.S.-China trade war, which started in 2018 and is marked by reciprocal tariffs placed on items valued at hundreds of billions of dollars. In addition to upsetting long-standing trade patterns, this war caused uncertainty for companies doing business in both markets. Furthermore, some nations have expressed skepticism about China's Belt and Road Initiative, which seeks to improve infrastructure connectivity throughout Asia and beyond through investments in energy and transportation projects. They see it as an effort by China to increase its geopolitical influence under the pretense of economic development. Relationship tensions between China and Western countries have been exacerbated by worries about unfair economic tactics and intellectual property theft. In addition to forcing nations to reevaluate their strategic alliances and supply chain reliance on China, these geopolitical dynamics make it more difficult for nations to work together on urgent global challenges like public health emergencies and climate change. Number 3. Structural vulnerabilities. Even with its remarkable growth trajectory, China's economy has a number of fundamental weaknesses that, if left unchecked, might harm its chances going forward. One significant issue is the alarmingly high amount of debt that state-owned businesses and local governments have accrued when hidden loans not included in official figures are taken into account. The debt is estimated to be more than 300% of GDP. Financial stability is at risk due to this high level of debt if local governments or state-owned enterprises fail to meet their responsibilities. It may lead to more extensive financial crises that affect both domestic and international markets. Furthermore, demographic issues like an aging population is getting worse. Estimates suggest that by 2050, about 1/3 of China's population would be over 60. Older adults who may rely more on pensions than income from active employment may have less purchasing power as a result of this demographic shift, which could also lead to labor shortages and higher social welfare expenses that put a pressure on public resources. Sustaining long-term growth requires addressing these vulnerabilities through comprehensive reforms, such as strengthening social safety nets for older populations, encouraging sustainable urbanization, and increasing corporate governance among SOEs. Number 2. Emerging markets competition. China is facing increasing competition from other emerging countries, including Bangladesh, Vietnam, India, and Mexico, as it looks to become a leader in high-tech industries and improve its manufacturing capabilities. By providing reduced labor costs, welcoming business environments, and incentives for businesses wishing to diversify their supply chains away from China, these countries are actively seeking to draw in foreign investment, a movement dubbed as China Plus One. India's Make in India campaign, for example, seeks to increase domestic manufacturing while establishing the country as a viable choice for global firms looking for affordable production options. In a similar vein, Vietnam's youthful workforce and developing infrastructure have made it more alluring. As labor prices in China continue to rise, several businesses have moved their manufacturing operations there. Multinational companies may drastically rethink their supply chain strategies as a result of this competitive environment. They may look for more diversified production sources to reduce the risk of geopolitical tensions or possible disruptions brought on by domestic policies in China or other nations. Number 1. Future growth opportunities. Looking ahead, China's dedication to innovation offers significant chances for both domestic expansion and international cooperation in a number of areas vital to future development, especially those related to sustainability objectives like electric vehicles, biotechnology breakthroughs, healthcare innovations, digital finance solutions, fintech platforms, renewable energy technologies, solar panels and wind turbines, etc. Through significant funding initiatives, the Chinese government is making significant investments in these areas with the goal of promoting entrepreneurship in emerging industries and fostering research and development capabilities. This approach not only strengthens economic resilience, but also positions China as a key player in effectively addressing global challenges such as public health crises and climate change through cooperative efforts with other nations seeking sustainable development solutions together as we move forward into an increasingly interconnected world where cooperation will be crucial for success. For countries around the world, the nation's shift to innovation and sustainability offers both opportunities and challenges. Businesses and governments must comprehend these dynamics in order to navigate a global economy that is becoming more intertwined by the day. Thanks for watching our video, and don't forget to subscribe.